Wonderful good day, ladies and gentlemen. We are in Zurich here today at the roadshow of Dynacor. And we would like to talk to Jean Martineau, who is the president and CEO of the company. Jean, thank you very much for taking the time.
Good morning, sir. Pleasure to be here today.
Fantastic. Dynacor, what is the company about, as you are the first time on our TV channels? And I would like to have a short insight into your company, please.
Well, Dynacor is a mining company listed on the Toronto Stock Exchange, and we are operating in Peru. But we have two sides of the company. One is the ore processing, where we buy ore from small producers, we process it, and with the profit we pay for the exploration. So this way we don't have to dilute the company continuously. And on the other side there is the exploration side with the main property Tumipampa. And we have this property for the last, we bought it in 2000, and we have discovered on this property 3 different mineralization. High-grade gold veins, 15 of them, disseminated on the surface, and a huge skarn on the north part. So it's like 3 kind of deposit on the same property. So it's really, really interesting for that.
Okay, then let's go firstly into exploration, as you just started with that already. I want to come on your 9-month figures also later on, but first let's go into exploration. You own all the concessions, and what will be the program, let's say, as we are now ending 2014? What have you done this year, and what will you do next year?
Okay, we own 100% of this property. On one small part, we have a NSR to pay of 1.5%, which we can buy back for quite a fixed amount of money. But we own 100% of that. We did up to today more than 17,000 meters of drilling. We have discovered 15 veins, high-grade gold veins, and the average grade we have there, it's around ½ ounce per ton. It's very, very high. And we have, last year we did a cross-cut of 300 meters going through the main structure. And we encountered this structure on the ground over 7.4 meters wide with an average grade of 17 grams per ton, which is almost ½ ounce per ton. And on the first 4.9 meters, it was 26 grams per ton, which is 3/4 ounce per ton, very, very high grade. And on all the drilling we've done, we've got results of that kind, around ½ ounce per ton, all of that. So this year we're going to continue this cross-cut for another 430 meters. So it's going to be 730 meters. And the objective is to cross some other main veins there. And parallel to that, we're going to start another cross-cut and to join them on the ground there. So we have, for the next, I would say 20 months, we have a budget there of almost $8 million to do this underground exploration, which will serve the same for the production when we're going to be ready to do that. So it's a lot of underground work done. Parallel to that, we're going to do, we did some surface exploration on the disseminated with interesting results, and we hope to begin drilling on this part this year too, in 2015, I mean.
Okay, fantastic. So when you say the 8 million, you can finance that out of the cash flow. And as I saw in your 9 months figures already, you have a working capital of over $20 million, and cash is so far over $14 million. So you will use it for that?
Well, we don't need to go finance outside. Actually, we have $21 million in working cap, and we have $14 million in cash in the bank account. We have a project to build a new mill in the southern part of Peru. The total budget for that is $10 million, and we already spent $2.3 million. So we have all the cash we need to build this new mill, and we have all the cash we need to do the exploration we want to do. And over that, every month we get in another $3/4 to $1 million in cash. So we don't need to finance it's going to be organically financed, the exploration and the construction of the new mill.
Okay, fantastic. I think you also have more cash than First Majestic in your bank.
I'm sorry?
I think you have more cash than First Majestic Silver in the bank by now.
We have, well, actually we have, $14 million, and it's increasing every month. So we have a very, very comfortable situation here.
Let's come to your ore processing business, as from there comes the cash by now, and I think you are, a really successful story. Your share price appreciated a lot in the last 2-3 years. And how were the 9 months so far? You have brought the numbers out, I think, one week ago, roughly. Yeah. And so are you satisfied with it? And also maybe can you elaborate a bit why you are down in Chala in the south and why you are not working in the north at some other companies?
Well, our mill is in Huanca, south of Nazca. The other mill will be built in Chala because the new mill will be just beside the highway. It's going to be much more accessible. We're going to have access to this mill with trailer trucks, big trailer trucks. We're going to be connected to the national grid. Actually, we produce our own energy, which is quite costly. It costs, I would say, about 25 cents per kilowatt. It's going to be cut by 3. So we're going to have access to the national grid. We're going to have access to the mill with big trailer trucks. So we're going to cut on the transportation cost. And so we're going to have access to bigger producer, which they cannot come to the actual mill. Yeah. So it's going to be a more efficient mill with reduced costs. It's going to be very interesting for the future.
Okay. Yeah. So I see there's some news flow coming up in the next months, right?
Hope so. But it's going well. It's going well. Yeah. Over the years, we have been always increasing the milling capacity. Actually, we have 250 ton per day capacity. We expect to be able to increase that to 300 ton per day. And the new mill will start at 300 ton per day, but has been designed to go up to 600 ton per day.
Oh, wow. Okay, so has this something to do with the formalization process? As far as I know, it's 350 tons per day. You can go without a permit, but you have the permit now to go over 600 then, right? Did I understand that right?
Well, actually, we have a permit for 250 ton per day, so it's easy to go with another 20% over that. Okay. So we can go to 300 ton per day with some study. To go for the new mill, we had to do another environmental impact study, which has been done and approved in the past. It's a longer process. But we are at the end of this process, so with the new mill, we're going to start at 300 ton per day, and to go to 600 ton per day will be just some work. So one day, if we want to go to over 600 ton per day, there's going to be a new, a complete new process for new license. Yeah, yeah.
So when you process now the ore, this comes mainly from local miners, and how many suppliers do you have?
Well, it comes from small miners all over the countries. Eventually, most of them are in, I would say, in a radius of maybe 200, 300 kilometers around the mill. But we buy high-grade ore from the north of the country, from all over the country. So we have actually more than 250 different suppliers. And we have been in this business for 18 years. We have the highest recovery rate of all these mills in Peru because all the other mills are privately owned. And we have a recovery rate of between 94 and 95%, which is quite high for that kind of business. And it permits us to attract the best miners, the best ore, the highest grade. Because if you have 1 ounce or 1.5 ounces per ton and you recover 75% of that, it means that you send to the tailing 25% of that. It's a lot of gold. Yeah, so that's why these guys will come to our mill. Yeah. And so we have developed that over 18 years. So we know this business very well, and it's going very well actually.
Fantastic. What are, let's say, the main milestones you want to achieve for 2015?
Well, we want to increase the milling capacity first to 300 ton per day. The other point is to build a new mill in the south, in Chala. And beside that, we're looking to other potential in the country and in other countries in Latin America. So for 2015, the objective is to go to 300 ton per day at a minimum. But later on in 2016 and 17, it's to increase that. We think that we can increase the production substantially over these 2 years with the Chala mill and potentially with other mills in the country and other countries in Latin America.
Okay, fantastic. One question, how do you ensure the quality of your ore? How do you do that?
Well, this is the trick, you know. We have a mill of 250 ton per day, and we have 300 people, 320 people working in the company. To operate a mill like this, you need 15, 16 people. 24 hours a day, 7 days a week. But for that kind of business, when you build a mill for the ore of your mine there. In our case, it's like if we buy ore, take ore from 250 different mines. So you have to analyze all these ores to be sure of the gold content, silver content, and other metals, because there are some minerals that we can't operate, we can't process, because we don't have this capacity. So we have to be sure what kind of ore is offered to us, analyze that very well, and see what is the recovery rate, because when we pay for that, it's based on the international gold price, but it's based too on the recovery rate we can get from that ore. And one ore we can get sometimes 96, 97% of the gold. Some other will be 86 or 90. Yeah. So the way to buy that, to pay that, it's based on the recovery rate. So we have to do all these analysis before to buy ore. It's a lot of manipulation, but at the end of the day, we have a margin, which is interesting because we're not.
How high is the margin?
It's around 17% gross margin. And what is interesting here is we are more protected against a lower gold price because we have that margin. We are less affected than a pure producer, because a pure producer, if the gold comes down by $100 per ounce, they will lose $100 per ounce. In our case, we lose 17% of that. So we're much less affected by the gold price. We're affected, but not so much than a pure gold producer. And in our case, it was built to pay for the exploration. So we can forecast more easily what's going to be our cash next year, the following year, to increase our exploration. Yeah. And there we have an exploration property, wonderful. We're going to need millions of dollars in the coming 2-3 years to develop that. And we expect to maybe start first production there maybe in less than 3 years. So, and as we have 3 different mineralization of this on this property, at least with the gold veins, we're confident that we're going to have a mine in operation quite fast there. And for the disseminated, we need more information. We need more exploration. We're going to see the potential of this of a disseminated is quite huge. And when we look at the skarn, and we are surrounded by 5 or 6 big skarns. Here we speak about hundreds of millions of tons. We have to test if it's economic or not, but the potential is there. And we find gold all over this country in all these different deposits. So it's quite exciting. It's very exciting.
Yeah, well, as we all know, Peru is fantastic for gold, that's for sure. And I think your business model is very compelling on that. Last question. When can your shareholders expect maybe a first dividend?
Well, it's a question I received quite many times in the last 2 years. And I said, well, when we're going to have the Chala mill built and working full capacity, there it's maybe time to start thinking seriously about that. We're going to see in the coming future, but if we, the day we're going to be at 600 tons per day, we may generate, based on the last year, profit of maybe $25 million a year, a cash flow of over 30. Yeah. So there we're going to be able to start paying dividend there.
Yeah, because that would be something like in the order of 70 cents per share profit, right? You have 36.5 million shares out, right?
Around that. Yeah. So there we're going to be comfortable to start paying dividends.
Fantastic. Sean, thank you very much. All the best for that. We look forward on some news flow and keep fingers crossed that you're going to make it.
Thank you very much. It was a pleasure to be with you today.
Perfect. Thank you. Yeah, ladies and gentlemen, it was Sean Martineau, the president and CEO of Dynacor. Well, you heard it. They are, 2 ways in the business. The first thing is they are exploration company, but they are also a production company. And you heard it. They make profit. They have a gross margin of around 17% what they do. And also they want to invest roughly $8 million in an exploration program from where they have already spent nearly $2.5 million. So, yeah, looks quite good for 2015. We are curious on the exploration results, of course. Well, we know Peru is fantastic for gold. And also their properties look like half an ounce per ton, maybe a little bit more, as you said. And so we will see what comes out of that. Thanks for watching Commodity TV. Check out the company. Bye-bye.